After a big run-up on Wednesday, stocks off to a slow start on this Thursday. Let's bring in Chhad Aul for the longer-term view. He's Chief Investment Officer and Head of Multi-Asset Solutions at SLGI Asset Management. Chhad, we go up, we go down, we go all around. This has been a tricky market. I guess let's start with the interest rate story, and I want to bring in the Bank of Canada and the situation here in Canada. I don't want to talk about Fed all day, all week, but the idea that rates are going up, whether a central bank is a little more aggressive, a little less aggressive, how are you positioning in this market right now?
Yeah, it's a great question, and you're right. There's a lot of interpretation of what exactly Chairman Powell meant yesterday at the Fed when he seemed to take 75 basis points off the table. But whether you're talking about the Fed, the Bank of Canada, it's important to note that so far this year it's been pretty much a one-direction play on ever more hawkish sentiment, right? And it's affected asset class broadly. So it's important that, it's just a reality check that, we're not in a, there's some limit to how much hawkishness, how quickly we can go to make up for certainly, being a little bit late to the game in terms of tightening. So, we've had corrections across many markets. It's important to know, we're going to see some relief rallies. We may see a little bit of follow through, even from the news yesterday. But I think over the next couple of months, expect some choppy markets until there's clearer signs that inflation is beginning to moderate, and that central banks will have greater flexibility to be far less hawkish and a little bit more data dependent going forward.
All right, let's go through some of the individual sectors. I'll start with tech because one of the big earnings stories we had today in Canada was Shopify, which had been this star performer, and it's had this dramatic drop. And the earnings did not encourage investors. If we went back to this time last year and companies are talking about investing for the long term and acquiring businesses that are going to help them grow, people would say, okay, look at this, revolution we're seeing in e-commerce. And in such a short amount of time, sentiment really changing that these have become such prove-me stories. At what point does the sentiment change, or do the most bearish out there who say, no, we're just seeing the early innings of this, what are you going to be watching for to determine which path ends up being the one taken?
No, so it's a good point. And, people were extrapolating earnings growth during the pandemic into, well into the future, much like we just talked about, markets extrapolating central bank tightening up into no man's land. So when it comes to the tech sector, I think what we're going to see is once we get past some of this very near term tightening that's going to be very strong, inflation begins to moderate, but we are heading into a cooling economy. The high quality technology stocks and the ones that were probably less a part of the pandemic story, but have more resilience to all parts of the cycle, and some of those quality segments of technology are getting thrown out with other highly valued segments of the market. As we get into that slowing segment of the portion for the economy, those are the sorts of stocks that are going to do exceptionally well. You just need to ride out these next couple of months where I think we're still going to have that hawkish tilt.
Yeah, and look, there have been some of those safer plays out there. Our parent company, BCE, came out with their quarterly results. If you can have crowd-pleasing earnings and you're kind of in that bucket of stocks that are seen as safer plays right now, maybe that's where some of the money gravitates. Certainly, we've seen huge money flows towards the commodity complex. We've seen that in the energy trade. A couple of big oil developments over the last couple of days. First, the EU making more of a stance and more of a move away from Russian energy supply was seen as something that is at least temporarily bullish for crude. And then today, once again, we're reminded that OPEC is happy to pump out oil, but on their terms, and they're certainly not going to do it to the extent that those who are concerned about the supply gap are concerned about it. So if you're looking at the energy sector as an investor, how do you approach it right now?
Yeah, I think you have to understand certainly that there's been exceptional gains, and particularly against a backdrop where pretty much every other sector of the market has been putting in negative returns. So you have to understand that to begin with. But what are the upside catalysts here? So the story with the EU, yes, give some clarity certainly on how they're going to approach, ultimately cutting off Russian oil and gas from their, oil and oil products from their market. But they did leave enough time that this can be done, in a way that they can source new supply, and ultimately China and India, we expect, would pick up the excess supply from Russia. So to really get another, significant leg higher in oil here, approaching year-to-date highs, I think a lot will depend on what's happening in China in terms of their current lockdowns, the zero COVID policy. But again, over these next couple of months where inflation is still a concern, energy could still be a reasonable place to be. I don't think you're going to see the same sort of returns that you've seen year to date, certainly. But then as you get into next year and cooler growth, less demand becomes a bigger concern. And we've seen this in prior cycles, right? Energy can continue to move higher, even when other segments of the economy are showing weakness. And then the drop can be quite significant. So, be careful as you get to that point. But I think over the next several months, it can still be a reasonable hedge against some of these inflationary concerns.
All right. Well, to your point, it's never easy. So the context is appreciated. Chad, thanks very much. Chhad Aul joining us this morning.